A billion square feet of offices, a record number of property launches, higher FDI inflows, and a luxury housing surge. Is India's property story at an inflection point? Or are there niggling problems like inventory pileups and the burden of hamstrung initiatives like affordable housing? In this episode, my colleague Kailash, Babar and I speak to Knight Frank's global chairman William Beardmore-Gray and India chairman and MD Shishir Baijal on the forces reshaping property markets worldwide and what's fueling India's rise. From latest trends, data and uncertainties to the GCC boom to the next wave of PropTech and sustainability, William and Shishir decode what's driving capital, sentiment and structure in India's real estate story. Listen on, it's Monday the 27th of October. I'm Anirban Chowdhury. You're listening to Corner Office Conversation. William, Shishir, very warm welcome to the Morning Brief. So glad you could make time.
Thank you very much for having me.
Thank you, Anirban. Great to be on the Morning Brief. Thank you.
Okay, William, a broader question. Looking at, say, the global economic landscape currently and whatever's happening, the geopolitical factors that are impacting the industry, what would you call one major headwind and one major tailwind that's impacting the global real estate industry and, of course, the one in India as well?
Well, I mean, look, I think the obvious headwind out there at the moment is uncertainty. And, what we've seen in the first half of this year, although we've seen an uptick globally in cross-border capital flows, and we can maybe come back to that, that uncertainty has just had the effect across most markets, whether it be investors or whether it be occupiers, in people just taking a step back, a pause for breath. The tailwind is, I would say, corporate real estate sentiment definitely seems to be positive. People are looking to make decisions. And so therefore, I think once we're through the current state, particularly in relation to the tariffs, we're going to see those investment volumes pick up.
William, over the last few years, India has seen several changes and sort of transformation in the real estate business environment. We've seen GST coming in, RERA has now been implemented, REITs are operational. So many changes, including demonetization, that also in a way was a major boost for the market. From your global vantage point, how do you see these changes impacting real estate in India? Also, has it started showing any visible impact on the market from a global institutional investor's perspective?
Well, look, from a global investor perspective, absolutely. Incoming investment into India is now almost at the level for half one this year as it was for the entirety of last year. And for cross-border investment for quarter two, India was sitting at sixth in the world, a significant increase. And so that, I think, goes to show the attraction of India as a location because of the significant uptick in offices by GCCs, the activity around the industrial logistics sector. The attractiveness of India has never been greater as far as that's concerned.
If I can just come in here, and I think the point that you just raised is, I think, is really relevant. If we look at it historically from 2005, when FDI first came into real estate, and it was a quagmire at that stage to invest in India. And since then, all that has happened, all the reforms that have taken place has really brought a level playing field today for Indian investors as well as overseas investors. And the quality of the investors that you can see are now long-term investors who are taking a plan on India, a stand on India over the long term. And so I think today is a great time to invest in India.
So, I was just before the conversation started, I was just talking to your colleagues and the number that I got was your commercial sales in India have sort of already crossed the half-year mark that you did in 2018, I think. And what I heard is GCCs are driving that growth. Shishir, why don't you sort of tell me about this phenomenon? And,
Let's take numbers in a perspective. If you look at numbers pre-COVID, because pre-pandemic, that's when the country was really booming. 2017, 2018, our numbers annual uptick of commercial real estate used to be 46, 47 million square feet. 2019 saw a peak of 61 million square feet of space, right? That was the peak, post which the pandemic came and we really went down to 34, 35 million, etc. Last year, we did 71 million square feet of space, right? And that was a record by close to, I would say, 20% higher than the 2019 number. H1 2025, we already closed 48 million square feet of space. So in the first 6 months of this year, you've done what was annually done in the pre-pandemic time.
Right.
Generally, H2 is higher than H1, but may not be this year for various reasons, because perhaps some of the larger deals happen in H1 may not get replicated in H2, but it's still moving towards a phenomenal number, north of 80 million square feet of space, which is huge. This has been fueled by a number of global capability centers, India facing business, as well as more uptake of space from third-party IT providers. So it's not only GCCs, but it's a combination of all. But primarily the last 3 years has been driven by the GCCs coming into India.
Is there a number as to what percentage of the growth GCCs account for?
Close to 40% now, which is huge. And some of them are taking centers from 100,000, 200,000 square feet to close to 1 million square feet.
Knight Frank recently came out with a report that shows India's commercial supply is likely to hit 1 billion square feet anytime now. And the country will then stand fourth globally in terms of supply. How do you think this is shaping up the entire ecosystem, and what kind of changes one can see from here on?
1 billion square feet really puts us behind the US, China, Japan in terms of really quality commercial real estate. And that's happened in close to, I would say, 25 odd years since 2000, Even we feel that if the country grows at a nominal pace at 6.5, 7% GDP growth, the need for office space, the 2nd billion, would come as early as 10 to 15 years.
Shishir, after 5 years of a solid, steady run, there's been some concern that people are now raising about unsold inventory and a pile-up in the residential segment. Do you really see a pile-up there? And how does it look like from your perspective?
I think that's a really interesting one. I think if I might give a little longish answer to it, to put things in context, the residential sales are at pretty much the best they were for a long time. The number of units being sold, the number of launches that are coming up are perhaps at the highest levels. The amount of stamp duty collected with the state exchequer is again at record levels. Whilst these are high, unsold inventory, as you mentioned, perhaps may have risen marginally in many of the cities. But that's only one part of the dynamics. You got to look at the velocity of sales. How is the velocity of sales? How many quarters is it taking for the inventory to be sold? And when you look at all of this in a context, you will look at numbers which are quite dramatic. In 2020, it used to take 10 or 10.7 quarters to sell a property in Mumbai. That's gone down to 6 quarters today. So from 10 quarters to sell is down to 6. In a national average, it used to be, if I'm not mistaken, close to 8 quarters to sell is down to 5.7 quarters. The unsold inventory is high, but is it a worrisome number? We don't think so as yet.
Talking about global lessons, and no one better than Knight Frank to ask this. The China problem, the real estate meltdown, it's been quite a few years now. There doesn't seem to be a turnaround. What are the 3 or 4 lessons that come at you so that this is not repeated, perhaps?
It's a very good question. And we've seen it all over the world, not just in China, over the last 25 years, where the development cycles, moved very quickly. And then events have, whether it's the global financial crisis, whether it's other events, have created significant oversupplies of property. And I think that's compounded when you're looking at very fast-growing economies. Those events are very difficult to predict. And what we have seen around the world now, particularly over the last 3 to 4 years, is a significant shortage in high quality product caused by a slowdown in speculative development generally outside of China. So, I think the landscape is it's practically impossible to predict those black swan events, and they're always going to have a significant impact on particularly global real estate, which is, moves in pretty long cycles, which are difficult to turn on and turn off to react quickly.
Ever since 2005, when FDI gates were opened, a lot of investment has gone into India's commercial real estate particularly. But last few years, we are seeing the interest in the residential segment, data centers, and logistics is also picking up. Are you seeing a sustained institutional appetite for residential, logistics, data center assets, and even in newer segments like senior housing and student housing?
I think those will continue. I think the office sector is the favorite of all. I think the demand for offices, and you've seen what's happening, where really vacancy rates have come down close to 200 basis points over the last few years. Grade A demand or vacancy levels are sub 5% in all the markets in prime parts. So the office is obviously everyone's favorite. Warehousing and is again another favorite of everyone. Residential in platforms, yes, a lot of funds are investing in it. And data centers, and I'm sure we'll talk about data centers and the demand for data centers throughout the world is a key demand from most of the funds. Where I think the potential lies in India is the living sectors. And I think that's where I feel that the institutions are not yet in the terms of what they do in the rest of the world. And that is whether it's senior living, it's student housing, it's the rental demand for residential homes in an organized fashion. And I think that's something that the rest of the world is great in investing in the living sector demand. And I think we are totally underrepresented there. And that's perhaps because of the low yield today that we have in residential at close to 2.5 to 3, while commercials at, north of 6.5, 7%. But that's something that will, in our view, will grow in the long term. And we have already seen investors come in today and looking at this market of living sectors, as we call it.
All this while, we've seen global investors, including private equity players and sovereign funds, taking exposure to Indian real estate through joint ventures and platforms. Do you think they will now come and start taking more direct development risk here? Or will it continue to be a platform-style investment?
I think it'll be more, at the moment, continue with platform. I think they're looking at partners and they're looking to grow with the platform. And that's I think most of the large funds and sovereigns. But however, as really large scale developments are now coming into the offing, 3 million, 4 million, 5 million square feet. In there are certain investors who are not shy, if the partner is right, to take an individual SPV focused investment. But I think the majority of the investments will be more platform led.
But I don't think that's particular to India. I think you look at all major cities around the world, those joint venture or partnering arrangements are now commonplace, particularly as the size of investment in some of these schemes and platforms is so significant. And also when you have particularly sovereign wealth or private capital entering new markets, the safest way to operate is with a local developer, a local owner investor. So those platforms, I say, are commonplace around the world, and I can see that will continue to be the case.
When you say the safest way, these investors are trying to insulate themselves from certain risks, right?
Well, look, I mean, the development is a hugely risky game, just simply because of the timescales and the different issues that can occur, and that is about local planning, etc. And the people who know those locations best are those that have operated in those locations for years, and therefore to find good local partners that one can trust is a significant aim for cross-border foreign capital.
Tell me about, the luxury residential market in India. And we've seen, even for someone who doesn't cover real estate like me, the ads, the news, whatever Kailash writes, we see quite a spike there. Obviously, there's personal wealth, but what other consumer behavior is driving this? And do you think India is unique in this way when you compare it with other global markets?
The share of luxury homes has risen dramatically as compared to the affordable. In fact, the sub 1 crore homes have gone down. And the homes above 1 crore today nearly account for close to 50% of all sales in the country. Unheard of 10 years ago. So, I mean, that's a huge percentage and it continues to grow. I mean, that has challenges too, because the real need for homes, in whether it was the Prime Minister's scheme, etc., for housing for all, still remains unanswered. And that we need to look at that. But to just answer your question, the need for homes, larger homes, better homes, etc., is really continuing. And I think we've reached perhaps the highest number of homes sold in that segment that we've ever received. And this is not only a Mumbai story. This is across all 8 cities in the country that we cover.
Right. But do you see it in tier 2, tier 3 as well?
We don't monitor tier 2, tier 3 really. As an agent, we really do the top 8, and that's where we monitor those numbers. But anecdotally, if we look at the numbers, I think it would. And I think that story continues, as if we're looking at a new trend that's happening over the last year or so, as GCCs and corporate offices are moving towards tier 2, tier 3. And that would then bring about that change there too. And it's perhaps we are remiss that we are only monitoring the top 8. And I think we should move as time progresses to perhaps the next 8, etc.
Shishir, you referred to Prime Minister's vision of housing for all. That mission was aimed at boosting affordable housing supply across India. Do you think it has helped bring private builders into this segment? And what more can be done to overcome the challenges like land availability and even financing?
I think it's a huge issue. I mean, all of us, not only we as consultants, but as Indians, we feel that I think the housing for all was perhaps one of the most noble schemes that the government did over 10 years ago. And a lot of changes that happened was meant to promote that. But I think there are a number of issues that took place which didn't allow it to succeed as much as perhaps should. And that was escalating land costs, the high cost of construction costs, the availability of credit for the developers, as well as availability of credit for the buyers. I think the number of structural changes that need to be done to really promote the affordable segment. At this point of time, with the high margins that are available for the houses above or the premium and the luxury, very few developers are focusing in affordable housing. And I think we need to focus on that.
Right. I have a question for William. If you were to rank countries now or markets by real estate risk, is there a realignment that has happened because of what's happening, either in terms of conflicts or executive decisions, etc.?
Well, I think that the traditional markets, whether that be US, Europe, Australia, Japan, they remain strong and they're attracting a lot of cross-border capital. We've seen a significant change in relation to where India sits on that scale. So yes, there has definitely been a realignment over the last 2 or 3 years.
How do you see PropTech evolving in the Indian context, especially in terms of data analytics, AI, and even fractional ownership models?
Look, there's a huge amount of investment clearly in technology, PropTech, AI at the moment across the world. We ourselves are closely looking at ways that, particularly across the asset management space, occupiers are approaching the occupation of buildings. How can we be more efficient? How can smart buildings, drive innovation and help occupiers across the world look at those cost savings that they're trying to make? You also read at the moment, I think we're at a particular stage where some of the corporates are struggling at how they can actually integrate AI into their businesses, perhaps not seeing the productivity changes and savings that they might have hoped for. And so we're in that place at the moment where that significant development, I think, is yet to come. I think most of that development happen over the next 3 to 5 years.
But is tech and AI helping you predict cycles, etc., disruptions, etc., slightly better?
It's absolutely helping us predict occupier behavior, for example. It's helping if you look at the way people are creating digital twins of buildings, for example, that makes them more efficient and look at how occupiers behave in relation to their choices. can be incredibly helpful in terms of the asset management and how one looks to invest in property.
Do you find sustainability a significant part of the Indian real estate discourse yet? Or do you think there's a huge gap when you compare it to, say, other developed markets?
Well, I think it's changed significantly over the last 12 to 24 months. If you'd asked the same question 5 years ago, it would have been a different answer. But, it's absolutely come up the scale in terms of importance.
Yeah, no question of that. And I think when you're looking at occupiers and all coming in, I think it's like earlier, green building now, whether it's the sustainability, ESG, wellness, all of these things are an important part.
Would you say investors are also playing a role in pushing this forward?
Yep. I think it's great. I think it's a massive bit of push. And I think a lot of some of the investors will not touch products which are not sustainable.
One final question to William and to Shishir from my side. One major disruption that you think will change the way real estate is sold, bought and occupied globally, and of course Shishir in India in the next few years. And this can't be what you've already mentioned in the course of the conversation.
In terms of the occupation of offices, I think that the corporate real estate community is still juggling how they really balance that hybrid model with creating the culture within an organization. I don't think people have absolutely nailed how you create the culture an organization needs to drive forward and the hybrid model. So I think that disruption is very much taking place at the moment.
Right. Shishir.
I mean, I couldn't agree more with Will, but I think the other one would be technology. I think tech's putting up a huge disruptor coming in, and the way people buy and sell property and the information and the data that's available is going to be a massive difference. Whether the way you purchase homes and the way you market, everything I think is going to be substantially technology, and the breakthroughs that are going to come in the next few years is going to be enormous. I think that revolution is just coming in.
William, Shishir, thank you so much for joining us.
Thank you very much.
Thank you for having us here. Thank you so much.
Indian real estate is no longer an emerging market footnote. But as the nation adds its next billion square feet, the critical questions that remain are whether it'll continue to grow despite global headwinds. Is it just a matter of time before the inventory pileup becomes a concern? And will important projects like affordable housing ever come back on track? That's it for today. You were listening to this episode on Corner Office Conversation, where we talk to the most interesting business and thought leaders from India and the world. This episode was produced by me, sound designed by Amrit Reggie. A new episode of Corner Office Conversation drops every alternate Monday on your favorite listening platform. Stay tuned.